Good morning, everyone. Some friend asked me to take a different approach and help small investors invest a stock market. So here you go. Before I get started, please kindly subscribe or give me a like after watching this. That will help acknowledge the great work and efforts that I put together. Remember, this is really intended for you, the small investors. Okay. So I have a list of stock. And I can actually give you a lot more history about how this stock were picked and come about, but that's not the focus of this video, so I'll just skip it for now. So at the end of the video, for those of you who already followed my video earlier, should be still in good shape because you have invest, those stock that I have told you to, and should make pretty good return. In this exercise, you also will find out what does buy and dip mean, by really doing these actual examples. And I'll just give you this. So this is a new approach. So I've opened a new account and I put 1,500 in there. Currently, I didn't really trade all 1,500 because I leave some cash to buy something else. So because this is real, right? When buy my 1,500 is all I have, and I have to really spend it wisely to invest. And currently, I spend about $500 if you see it. So this account was opened in March 1st, pretty brand new. This is a Ameritrade office. You can see that. I'm not really marketing you to open a brokerage in Ameritrade. Just remember that just in my preference picking it. But Ameritrade does have advantage that it doesn't require minimum deposit, just like Robinhood. But I felt that it's a little bit more secure in terms of personal security and not that easy to get hacked. So so you can see that if you remember, 2 weeks ago, the market has a dip, a sell-off on Nasdaq in particular, around March 5th, like probably 4th, 5th, 6th, around that range. You see the market have been tanking. And for EV, actually happened earlier than that. For XPain and NIO, it was like a week earlier than that. Like you'll go back to end of February, you already start slipping. You can see the prices of those EV stock have slide. So after the dip, which is on the March 5th and 6th, as I described it, these are the stock that I currently bought it at. So let's go by one, and so you can get more context into it. So first one we talk about is the AI stock, as you can see, about 2 shares there at 84.55. So give you that price, you know the date, which is March 9th. Okay. So the stock was beating up very badly, okay? And I actually should have got it on March 6th, but I didn't look at it. I was so focused on EV and other stock at that time. And just bear in mind, because also you not necessarily buy right away because you were still at most of the investor at panic mode when the market sell-off happened. You didn't really know whether it's just indication really rebound in the market or just one lucky day that rebound and slip again. So obviously we see the market kind of stabilize with stimulus announcement or expectation, and with yield curve slightly slip a little bit, now rebounding back to 1.61%. It really gave a little more confidence, the time to bought around the time. So what I meant by that is you really didn't buy at the day. If you had buy at the day of the 6th, March 6th, or March 5th before the market closed, you probably get a really, really good deal. But now, on 7th and 8th, the market probably have a rebound a little bit already. But then there's still enough momentum or things, an indication to help you to be more confident, and you actually still gain from the market. Okay, I just want to share that with you. So remember the media talk about this company AI. So move it up a little bit so you're more focused. The first line. And you talk about this company, how great the line of business they have, and because of sell-off, the stock was at 150 range. Before the sell-off, it was actually $150 range. The first day IPO was $90. So that's the key. Tell you that the IPO day for 90, and then you jump up to, I think it was really high, like 100, 180. So you tell you're really big, right? And you're currently trading, if you look at the market close today, is around 86-ish. So, but you have been trading around 86, 88 range. So on March 5th, it went down to $77 intraday low, but we bought and closed with $95 that same day. So going back to $100 shouldn't be a problem. So if you think about it, like I bought it, show you example, buy it again, because I believe the stock is good value. But so I buy one share only this time. So I bought 84 and 83, so it ranged up at $84 average now. I still believe the stock will go back to $100. So if you do the math really quick, then that is 20% return, okay? And I expect that 20% return will come around April timeline, which will same within a month, okay? And so next one, now I want to look at this one, Billy, which I bought again on the 8th at $103. And actually at that time, the lowest were hitting like $98, okay? So didn't really get it, didn't really think about buying it at the time at the deep, but then I saw 98 it was really quick and rebound to hit 100. So then by the time I want to buy it, you really went up to 103. So the 52-week highs was 157.66. The day sell off happened, came down slightly below 100, just like I told you earlier. I bought it at this level, which is $103. And I really believe the stock will be going back up to 120, 125. I honestly don't anticipate go back to the 52-week highs 157, but between 100 and 150, you divide by 225 is possible. So the key is that the same of this type of stock may not go back to a prior March 5th high, but definitely will be in between of the level, okay? Then the next one, which I want to go over, is this one, which I bought at 8, a Pinduoduo. For those listening to my video before and familiar with what I do and how I describe and what they recommended, you should know that I have bought this stock around 100, or at least stop people buying it at 170, the second wave. The first wave was $170, it gone up to 100 plus, and then I time to sold it, and then it came in the second wave, which the market really strong, and 170 you push it back up, and really, the previous video had explained why I think this stock will go up to $300 in 1 to 2 years. So the stock actually went as high as $202 and dipped on the sell-off day, which is again March 5th, as low as $136. So I bought it actually, like I said, you're very difficult to buy it at the lowest point of the intraday at that really deep, but somewhere in between. So $144 wasn't a bad deal. So if I want to sell this one and you start holding for a year and 2 years, okay, then I can sell at $175, which is 21% return. And I'm actually set to buy more, which you can see on the screen once after I finish going back to history. This is really what I actually bought. I will say what is something I set up on the line, down the line, okay? Then the next one I have kind of, when I did some analysis, I go back to look at this one called FROG flop. So the company logo really is a flop. And the first day IPO price was $60 and gone up as high as $95.20. This high-tech company developed platform on AWS and clouds. The product is to store, update, and manage the software package at any scale. Okay, so before end of February, it was $60. The stock is slowly rebounding from March 5th low of $45. And so you can see that I bought at $50.34 today. So it wasn't that bad because I think this is pretty good deal, still opportunity. And you probably will go back to $60 then we sell it. So if you think about it, $10 divided by 50, that's another 20%. And like I said, from a time perspective, you really, I'm looking for maybe April, mid-April will hit that, within a month. Or maybe, if the fast is 2 weeks. So this 4 stocks just described to you. You can buy them after this Wednesday. We have a very important FOMC meeting that Fed going to talk about the policy, ongoing monetary policy, which probably cover the interest rate. And at this point, no anticipation increase of interest rate. Whether asset repurchase, I assume they will say keep going to buy the asset as is. but then they're concerned about the yield curve, which I doubt they will do anything with it, but except they will say, hey, going up is healthy. It was still low compared to historical average, is still relatively low. I mean, and it's just cost of the business is healthy. And then they will closely monitoring that, and if they need to step in, they will. I think that is really what anticipate happen, but that will probably bring the market into a negative aspect of the message. So I am thinking the stock will go down. But bear in mind, what I'm talking about at the dip, which if you listen carefully about the price high, 52-week high, and where they are at the the day low, intraday low on the sell-off day, and then now and where I bought a little higher than that, it's still actually a bargain, right? So because if you do the percentage of the 52-week high comparison, it actually will be still 40 or 50% discount, right? I mean, how much can it be going down more, right? Think about that possibility. Another 10%, 60, so only 40% left. I mean, I wouldn't agree to use the when you started to look and mark back up, because some stock, I mean, the P/E ratio always have been, and particularly in IPO, the new stock, you could have P/E ratio 20, 30, which consider normal from that, because it's just a new company that they will know expect that they have no profitability, right? So if you're using that way to look at when it was low and do the valuation, well, then there are too many stocks that you actually have to sell in the market. You couldn't even own them. It doesn't make any sense, right? So I just want to bring that perspective to you while I'm using the 52-week high, mark it down, and look at the percentage of discount rather than look at when you started and you ramp it up and how much was it and how many X, right, that actually have gone up, because that just doesn't make any sense. Then the next thing is, so I want to show you how much profit these actually have generated. So we get a really good aspect of view. So like I said, I didn't buy all of them. So just that way you will have idea again. So this is the actual, okay. Today is actually down, I think, yeah, $8. So with $500 that being invested, part of it is because AI have dropped $3. And then Pinduoduo has dropped a little bit. I mean, it was actually lower than that, but it rebound and still lower than the PE is open. But then you look at the gain, which is percentage. Pinduoduo, despite dropping a little bit, is still really cheap because it bought at 143. So 11% return. And actually, the day before it was a little higher. I've seen 16% return because you have $165 or something like that. And then Bilibili also have an 8% return, which is actually because you really buy it at a dip, so it's pretty good percentage. AI, I just bought it. I anticipated you will go up to $100, so I have to be a little bit patient with and observe that monitoring for a month. And so does FSLY. I think you'll go $60. You just probably take within a month or 2 weeks. So overall, you're capturing with the cost calculated. Since I only bought a few shares, haven't sold anything, it's very simple calculation. 17% return. So if you have to remember 17% return, and when did I buy these stocks? It's at March the 8th, right? Now we are at March 15 today, 1 week, 17% return. What do you say? And again, remember, I have a different approach. I'm not doing options. I'm not doing short sell. I'm not doing, buying, buying on something that's a little bit, not owning stock on the inventory on the hand. So I felt a little bit more secure in my perspective, and I look for the discount stock that that put it into positions and buying them. So just to bear in mind. And then now I'm gonna give you a few more stock that just give you more help and perspective. So these are the stuff I call lineup because they don't match the price yet at this point. And I will just go with that's these stock that you will not be bought right now, but when the market adjusts, which possibly after Wednesday, then but not yet a correction, you will be able to buy those. So I'm going through this one by one, okay, just to give some idea. So BRGC, I'm currently setting up $53, 3 shares, okay, that's about $150. This BRGC is an e-commerce company that is a rival of Shopify. The stock is currently at support level of $58. This is a stock that has a formation of V-shapes many times in a year. You can go back in the graph. I'm not going to show you. Just go and look at yourself. It is a great candidate for day trades. Well, when I say it, I don't mean really a day trading, but maybe within a week, within 1 week, you can see the V shape or the $10 gap I'm talking about. The 52-week high was $162.50. $662.50. The stock went to IPO last year at August 5th, 2020, around $65. On February the 12th, the stock reversed back again. I mean, in between, again, there's a reshape, but I'll just go back to 2021. Real quick, February 12th, the stock reversed back to $90 from $60, okay, just to give you an idea. On the day of the sell-off, it dropped to $51 intraday lows, but closed at $59, which is where kind of they're at, currently about $59.60. So the stock has a great trading range between $56 to $68. But when this breaks through 68, it will probably go to 75, and then 80 plus and $90 or more. So I would suggest this one. I mean, 53 is kind of low end, so you would have probably can, based on personal preference and tolerance, you will buy it at 53 to 56.50. I will not pay more than 56.50 or 57. The highest I will pay. You set in the system, you should have dropped during the intraday around the 50 cents or $1, because right now it's 59, but you could have dropped to that point and then rebound back, okay? And sell. And then once you bought, you will set up a stage of selling. You will have a little more sell. You will set up between around $65 to $67. Just bear in mind, the range I'm talking about, again, is between $7 to $10 differences. So it's up to you what price you buy it and what you want to sell. You can sell $8 more. So that's how I would play around with that. And within the months, like let's say 3 months, you probably could be able to executing 3 or 4 times of this. So it probably, in my opinion, in this case, this one is better off than holding for long term, okay? But long term, again, if the market continue to persist, this company proven itself that they are doing well. One of the one of the e-commerce company that will continue growth and with more profit, then they could be go back up to $100 or $130. The next one I will talk about is also a high-tech company, FSLY, FSLY. This is similar to BRGC from the observation of the pattern of the trading. It's also trading a range between $68 and $75. So that's again give you about $8 range, right? This is the $7 to $10 range I'm talking about again. The stock has jumped from early last year $40 to $80. Then this stock has hit record high at $136.50 on October 13th. Last year, the stock went into some issues and litigation issue, a lawsuit. This company biggest customer is TikTok, and you know what happened with Trump last year. I'm not going into that fine detail. So then you dropped it back to $60. But then due to the great earning, it climbed back to $100. So on March 5th, the stock was hit with the concern of yield curve and was $58.21 intra lows. So I will recommend them buying this stock around 60 some dollars. I set up 67.88, but really you can set up between 65 to 68.25, your choice. And then I will set up a selling of around $75. Normally this stock has been struggled between $74 to $77 range. So you can set up in that range to sell once you bought it. And then again, with 3 months, you can do a few times and then you make good money. And also, I see the volatility on this one. It is around that. If you break through $77, then this stock will go up to 82 and then 90 and then so on. So again, this is another good stock that doesn't necessarily have to hold long, but obviously hold 3 months, you will definitely hit the price target and make a pretty good profit. Then the next one I talk about is HYLN, which is a very unique hydrogen blue gas company. The company was formerly SPAC, but the stock fell from $52, which is the 52-week high, to as low as $9. The stock was pretty stable around $15 to $17 range. If you look at it in ranges, you can spot it right on around that price range all the time recently. So below $13 is really a quick buy. I will tell you that because you do the math, right? Percent with $2 over 13, that's a pretty decent return, right? Over 15%. But I just want to put it a little lower, so I put it 11. But again, you can buy it at 11 to $13 range, set it up yourself. I actually own a lot of stock with this HYLN. I bought it at $47, then I bought it at $40, then I bought it at $35, I bought some at $25, then I bought quite a lot of $20, then I bought even more at $17 and $15. I actually bought very little at $13 because at the time it was panic mode and I actually have a lot of other stock to manage, so I didn't have much time putting into the deal. That I did get a few shares on $13, and I don't think I get any on 11 because it never hit that low. Because at March 5th, it was the intraday was as low as $11.17. So I will get it around 11.13 and set up to sell about $15 for short term. But for this stock and long term, you probably will hit $21 to $25 with some good news out there. But that just, I mean, this stock have been a little bit quiet. They have the youngest CEO in the world owning the company. He brought it into an executive team together and really started focusing on work on the company. So it may take a while before you get to some good news and profitability, okay? Then I also want to go through two more stock before I finish this video. So these two are penny stock, which means in this case, if you would decide to buy it, you have to expect yourself to hold 3 to 5 years in order to get a very great return. Otherwise, what's the point, right? So I don't understand why you're buying this stock if, penny stock, if you don't expect it to go big. But sometimes when you think about go big, it takes 3 years. I can give you a really quick example. Look at green energy stock, Fuel Tech, Fuel FSLY. If you were to look at their chart, it took them 5 years. There were 5 years they didn't do anything with the stock. And just because of the last year, starting October, I think, after Biden winning on November timeline, don't call me that, around the range, the stock start to spike up on all this green energy, and actually then you jumped it so skyrocketing a historical high, right? And some of them actually go 5 times, some of them go 10 times higher. So it has to be, in these two stocks definitely need patience. So ALIF is a lithium exploration company in North America and Argentina. The underwriter the latest news saying this, the underwriter have purchased common share of company at a price of 81 cents and a warrant at excess price of $1.10 at 24-month period. So what does that mean? That tells me in a 2 years timeline, this stock is looking for over $1, right? And currently it's trading at 59 cents. I would say trying to get it a little lower with the market, push it down a little bit with some, correction or minor adjustment. 55 cents or, 50 cents, I don't see it happen. But so I would say get it between 50 cents and 56 cents. And you bought it, look at how many shares you want to, because it's an OTC, you have to pay the $6 commission fee on the transaction purchase and as well as the sales. But so you may want to buy a lot higher volume than this case, just $250. This game is like $105 or something like that. So because of the limited capital, remember? So this stock is holding long. I really have a good faith, and I say, hey, at least I'm not gonna worry. If the market can do correction crash, and let's say this stock go down to 30 cents, I'm not gonna worry. I think somebody bought it, at 81 cents. Hey, they knew and believed the company. They did the homework already before they bought the shares. So why not? Then the next one is BRzl. So this stock is also in OTC. The trading range was from 0.005 cents to 5 cents, I believe, 0.05. So currently, if you can see, I set it up into 0.012, which is, if you bought a 0.005, that's a double, right? 100% return. So, of course, currently you're trading at 0.017. So if you want to buy it, you can still buy it, but a little more expensive. I do expect the stock, maybe this stock will come down a little bit. So that's why I set up this price. And even with 15,000 shares, it just come about $130, $40, something like that. So I really think that, how people make money. What are the business that really easiest to make money? In my opinion, is no offense, but it's always easy to make money from women, right? Because women have a lot more needs. They will buy cosmetics, right? They will buy clothes. Well, they will buy a really nice shiny shoes, right? I mean, guy may probably buy gadget, right? Playing video games and stuff like that. So different kind of needs. So this stock is just this company recently. They are just put a cosmetic line and market through Amazon.com and DharmaCarPro.com. So I really think if this goes well in the long run, the company will worth a lot more. So again, you have to give some time, 3 to 5 years, because you look at the Ultra Beauty. I mean, there's another company called ELF Simple, which is Beauty Store, and there's another Ultra Store, Simple ULTRA, I think. They actually gone a long way in order for the market share to gain, revenue go up, because it's really marketing, put a lot of money in marketing the brand and get people believing this product really good, and then the bunch of people go and buying them. So that's how it works. This may take some patience, it may take some time, but right now this is really an exceptional value. In my opinion, this is truly penny stock, that it is penny for you to buy it. So consider that, but you do have to hold 3 to 5 years. So I encourage people who are young, especially young investor who doesn't care about, I don't know, $100 is just a dinner, big dinner per house, right? You can, gadget like iPhone costs you $600, $1,000. So maybe you can put $200 in this stock and just put it aside and don't think about it till a few years later. And then before this video, I would also like to give you a few names. If you look back at February, these were stocks that have gave a really great return and still really good. Part of the video I have teaching, if you have listening, is with the economy reopening, there's certain stuff that kind of expected to benefit, and it's still true right now. If you look at these stocks, they're still going up. So one of them I did even do analysis on the CCL cruise line. This stock having gone up, and the time when the propaganda buying it, I think was recommended around $20, $20, I think. So right now you have gone up a lot. MGM, I know this one I have asked to buy below 30 at a time. I do have a video talk about why buy MGM. So this one actually I've been doing pretty good, and I mean definitely will benefit from expectation reopening. Then the other stock, FSLY, this one I'm going back a little bit, few months, a little older, but at that time was $8.50 and $9 that you would have got if you would have bought it, and now it's at $12.50. I mean, instead of buying, and the rationale behind it is, instead of buying United Airlines, which is expensive now, $61 today, right? Gone up a lot from $33, or you go and get American Airline, which is probably around, still a little pricey at that time, $12. Then would short sell people, pushing the high price to $20-some for no reasons. This FSLY stock definitely is a discount and is a bargain. And then bowling, I mean, people who were listening to me in February to ask to buy, bowling couldn't get worse than where they were at. You would have got at $200 at the time I told you, and today is $265. Well, obviously, I will ask people to sold them around $225 already, probably, if by the time you listen to my video advising you to sell. But this stock probably will come back down again. But I was projecting bowling go to $300, so $275 was the intraday high today, so closing up, right? You bought $200, $275. What's the rate of return in less than wow, that one February, so month and a half, 45 days, 30 trading days. What else can you ask for? And then remember, these are not speculative stock or some penny stock or something that, have a very highly risky that people tell you to take and you could lose all the money, okay? And on the intellectual side, I did recommend it back to January, February timeline. Baidu, BIDU Simple, and at the time I think people would have got it at $240, but they would say it's too expensive for them to buy probably, but the stock actually have gone as high as $350 in 2 weeks. And you were actually from 150 to 200 something by the time I kind of asked people to buy it, but I still say there's room. Obviously, the stock have got back down a lot with the, because of the recent sell off, and from 350 gone back down all the way to $260. But you should have sold it at 320 or 300 to 320 when I told you to do so. So then you still have a really incredible return, right? And then Pinduoduo, I just covered it, so I'm not going to go into detail of that. Bilibili also just covering that. And then before the end of the video, I'll give you 2 more stock to consider, which is not part of this list because, well, this person, well, in this case, owed money, so couldn't really recommend to buy anymore. And I'll set it up. So AMD will be one good to watch for. Semiconductor chips right now is really, they don't have enough supply, right? So they're trying to, Biden did an executive order for that already. So I don't know which company will be mutually eventually benefit from the executive order, but definitely AMD have been beating up from $90, dropped down to 75. I think back up to 82 now. So I will advise to watch it closely with AMD or some other semiconductor stock, which is like TSM. It had gone back down from 136 highs to 100 today, probably gone up, but last Friday was $114. And then there was one more that making the chips for Apple, well, which again, you got to remember Apple phone also saying they have to cut demand and production of Apple phone. So that stock maybe actually will be impacted because of the volume request and revenue. So you have to price that in as well before you consider buying that stock. And then the other one will be Blink, symbol BLNK. This one actually I made a lot of money on that when I bought at $15. It gone all the way up as high as $65 and sold at around $45. Right now trading below $40, I believe, or 39. I mean, you can set it around 38 probably. And then I think once Biden can talk about the $2 trillion green energy plan again, this stock will be brought it up and will be going up again on 5. So in the long run, if you want to hold it long, this stock probably not going to make money, but will have a subsidized from government. So they could potentially go up to $100 potentially. Okay, that's a big word. So, but then I still see that potential. I mean, in the short range, if he bought it up now, the stimulus is done. Next is taxation, right? Addressing corporate tax, which is what he said on before election, and green energy. Then this potential could have gone back up again to I would say $55 range. You probably want to sell it. If you would have bought at 38, do the math. That's $17. That is incredible, 40% return. And I would say from now till June that will happen, till summer, somewhere around that line he had to get that done, or at least talk about it, give more details. So I hope you like my video. Please give me a like. If you have any questions, just send me an email. Have a nice and wonderful day. I hope what I said to you will be able to, next time you're gonna listen, you see you make a lot of money, you'll be really happy. I take donation if you like it too. Thank you very much again.